I think we can start. So we have appreciated preparation of cash books, something very practical. So now we are going to move on to bank reconciliation. So how does the bank reconciliation come about? Previously, we looked at cash books, and we say the cash book could be single column cash book, different types, single column cash book, two column cash book, three column, and the petty cash books. So here we said we have the accountant. We assumed an accountant in a given organization who records transactions of cash payments or cash receipts in the cash column if it is cash, and if they use a bank payments through checks, then such transactions are recorded in the bank column. So what is happening here is that, especially I'll focus more on the bank. In the cash book, the accountant is monitoring what is happening in their business bank account. So assuming we have a company that has a business bank account, the accountant is monitoring all the transactions that are going through the bank. For instance, whenever they receive money, they have a check. Check first comes to the accountant records it, and then in the bank, this amount is as well recorded. If the business wants to make a payment, the payment will be booked by the accountant. The accountant writes a check and that money will be paid. So when the check is paid, taken to the bank, that money is deducted. So we would expect that in the bank, they are recording similar transactions together with the transactions in the cash book. You all agree? Because basically here we just have two different people but recording the same transactions. That is, in the bank, we have the accountant monitoring through the cash book, and we have the banker who at the end of the month issues what we call a bank. At the end of it all, the banker issues a bank statement. Are we together? So this means that since there are similar transactions being recorded by different people, then the closing balances should literally be the same. For instance, if we have a bank statement which reports a closing balance of 100 million, we have a bank statement which records a closing balance of 100 million. In the cash book, when we look at the bank column, we should as well expect 100 million. Are we together? We should as well expect 100 million. Okay. Do you all agree? Are we together? Guys, are we together?
Yes, madam.
Yes, madam.
Okay. I want us to go slow, understand this, so that when we are computing numbers, it's very, very easy. This is a very common topic. So we would expect that since they are similar transactions, the accountant should be expecting 100 million on his bank account, and the banker issues a bank statement with the same closing amount. Definitely should be like that. But unfortunately, it's never the case. Sometimes on the bank statement, the banker could record, could say, you have 80 million. Probably you have less, and yet the accountant is stating 100 million should be in my bank or in the business bank account. Or the bank statement could read a balance of 120 million, and yet in the cash book, the accountant is stating that there is only 100 million. So that is what leads us to this topic. That is what leads us to this topic, bank reconciliation. Have you gotten the notes so that we go through quickly and do a number? Okay. So if you've mastered that, then let's proceed. A bank reconciliation is a process of bringing the cash book and the bank statement balance into agreement. So when you realize that the balances are not in agreement, they differ, we move to what we call bank reconciliation. You're reconciling the balances. The bank statement reads 120 million. The accountant says there is only 100 million. You're now going to investigate what went wrong, who made an error, how do we reconcile and ensure that we are at par. That is what we call a bank reconciliation. You're reconciling the totals or the transactions reported on the bank statement together with what you had recorded, because we said that they are the same transactions but two different people recording. Same transactions but two different people recording. Since they are the same transactions, it means these transactions should actually be the same. Therefore, we should have similar balances. Excuse me. So a reconciliation is a process of bringing the cash book and bank statement balances into agreement by adjusting an account balance reported by the bank to reflect transactions that occurred since the reporting date. Then we look at some of the terms that we are going to refer to. One is we have a bank statement. What is a bank statement? Do you guys have bank accounts? Or you're still young? You're below 18? You're all below 18? You don't have bank accounts? Do you have? Great. So, members, a bank statement is a summary of transactions. The bank gives you a summary of what transpired on your bank account. So it's a summary of transactions between the account holder and the bank. When you send money, when you withdraw, when you ask that payments are done, all that it appears on a bank statement. Just a sample, if I even forget. Do I have a bank? Just a minute. Let me get you a bank statement. So guys, this is how a bank statement looks like. This is how a bank statement looks like. We have the bank name, account holder, account number, and so on. So you're able to see the different transactions. What you started with when you received money, your balance moves to that. You make payments, so we recognize both the debit, credit, and the balances. We keep on making the adjustments. So we have transactions that clearly show payments that were made. Then the credits show the receipt of money in your bank. So that is what we would expect in a bank statement. A summary of transactions. Sorry, all that. Okay. So now let's see the purpose of bank reconciliation. The purpose of bank reconciliation. First of all, it strengthens an organization's internal control. It strengthens an organization's internal control system through detection and prevention of fraud. So when you do a reconciliation, then you're able to track any amounts of money that have been reported as received and are missing, they are discovered. So any fraud is discovered. Then it enhances accuracy of records. Accurate records. Remember, this is one of the characteristics of financial statements. We ensure that we report information that is complete, faithful representation, complete, accurate. So it enhances accuracy of transactions. To ensure the balance total is correct, then to ensure that payments to the organization's creditors are current, okay? Where you record payment you have done, when did you last pay the creditor, to also ensure that problems are resolved quickly. When you do a reconciliation, you're able to identify some of these errors and correct them quickly. For example, assuming you had recognized that you received 100 million. So you go on telling management, yes, we received 100 million on the debit, and yet it was supposed to be a payment and transaction recorded to the credit side. So when that happens, it becomes very easy for us to dissolve. It decreases the time it takes to analyze the bank account. Because you have a reconciliation, you can easily analyze your bank. Then also to ensure that there is sufficient funds to convert the needed withdrawals for bill payments or spending money, and so many others. Read. So now we want to understand, and I need your maximum attention here. When you understand these reasons, then we can be able to prepare all these other reconciliation statements. Why does the cash book and the bank statement balance differ? Or why the cash and bank balance may differ? Because we said we have two different people recording similar transactions. Literally, this means that the balances should be the same, but it's never the case. Why? So before we dig deep into this, we need to know the rules. What are the rules follow? We have the accountant, we have have the account, we have the bank. Accountant and the bank. So here, the accountant is recording in the cash book under the cash column. Then the bank is also recording information the bank is also recording information the bank statement. I was saying we have the accountant recording transactions in the cash book. Please focusing on the bank column. Then we have the banker who's recording all this information and will issue a bank statement. So let's remind ourselves, what are the rules? Rules of posting the cash book. What are the rules here? Anyone who remembers?
Debit.
In the cash book.
Debit receipts.
And credit
We debit receipts, credit, debit receipts, credit, payments. Okay. So now it's different with the bank. In the bank, what do we do? Anyone with an idea? When you receive money on your account, when you're told that your account has received money, what do?
They credit receipts and debit payments for the bank statement.
Very good. Very, very good. I want us to move together. So you can all see the difference that in the cash book, when we receive, it will be a debit entry. And in case of any payments, we credit. But in the bank, we are saying whenever we receive money, we credit. And if it is a payment, we debit. Different from what happens in the cash book. So these are the rules. Different rules, but they all lead to the right answers. We expect that the accountant, following his or her rules, should end up with the same closing balance as the balance on the bank statement. Are we together? Now let's see. Maybe an illustration to this. We are trying to say that assuming we deposited cash to the bank from a customer. It means the bank received money according to the accountant. The bank received money, so they debit the bank. In the bank, it will be credit the bank. So in the cash book, we debit, but in the bank, we credit. Just like that. So let's go back to the causes of the different balances between the cash book and the bank statement. One is what we call unpresented checks. Are we together? Unpresented checks. These are checks that have been written and listed on the cash disbursement journal, but have not yet cleared through the bank. No, not causes. Why? Why the cash book and bank statement may occur. Saying one, the unpresented checks. Unpresented checks. So assuming we are paying off our creditors. Assuming we are paying off the creditors. So what happens is the accountant, through the bank, the accountant will write a check. The accountant will write a check. And therefore, the business expects that they have made this payment, and so will credit the cash book. In the bank column, they have credited. This money has left the account. Are we together? But then, in the bank, this is happening in the cash book. But then, in the bank, no entry is posted because no check was presented. No check was, yes, please. Also, why the cash book and the bank statement may differ. Yes, please. Yes, please. Okay, let's proceed. So unpresented checks. In the cash book, you're paying off a creditor through the bank. You write a check, you expect that this money has been withdrawn. So you will credit your cash book. But then in the bank, the person you have given the check does not present the check for payment. So no entry is posted on that. No entry is posted, and no check, because no check was presented. Are we together? So that means in the cash book, you have a payment of maybe 10 million, which is nowhere in the bank. You see that? So this brings about the difference. At the end, you're claiming that you don't have this 10 million, you made a payment, but the bank is saying, look, we did not receive any check. Or maybe the bank statement comes in earlier, okay, where you receive the bank statement before you could compile all the transactions. So that is the unpresented check. Then we also have uncredited. You'll be required to explain these terms. Uncredited checks. or deposits in transit. So these are deposits that do not appear on the bank statement for that month, but they appear on the cash receipts journal. They are deposited to the bank, debited to the cash book, but not credited by the bank. Uncredited, how does that happen? Because we are saying with the bank, when we receive money, we credit. When we receive money, we credit. So they have not received those checks. Probably they are the deposits the business had to deposit in the bank, or they received a check from a customer paid by check, but they have not yet credited the account. So that means in the cash book, the accountant has debited. Okay, in the cash book, the accountant has debited. The accountant is showing that they have received the money and therefore they have debited. But these items are uncredited in the bank due to various reasons. The checks were not taken on time, or maybe it bounced, so they are uncredited checks. That means these ones appear only in the cash book, but they are nowhere on the bank statement. Okay, another one. We have what we call direct debits and direct credits still in the bank. Anyone to try? What are direct credits? Members, anyone to try direct credits?
Direct credits, the amounts of money paid directly into your bank by someone else without physically depositing the money.
Money that has been deducted?
It is the amount of money paid directly into your bank by someone else without you physically depositing the money.
A direct credit. Remember, direct credit in a bank, to credit means you're receiving. So you're receiving money in your bank account directly. Direct credit. You're receiving money on your bank account directly without your know. So that means you're not in the know, then this transaction will only appear on the bank statement, but it will be nowhere in the cash book. In the bank, they have recognized the money that they received, but then you're not notified. What are some of the examples? Direct credit could be that you're earning commission. It could be that you're earning commission for saving with a certain bank, commission received for saving with a certain bank. It could be that you're getting interest. Okay. Or maybe customer made a standing order to make payments. From your customer. You're receiving money from your customer directly to your bank. If you have not been notified, then this would appear on the credit side of the bank, but will be nowhere in the cash book. Then someone to tell us direct debit. Anyone to try direct debits in the bank?
How about withdrawing money from the bank? Like you've just withdrawn the money from the bank without writing a check or anything, but you've just only withdrawn money from the bank.
Are you asking that in line with the direct debits? Or
Yes, with the direct debit.
yes, direct debits, you don't necessarily withdraw in person, but the
Yeah.
bank deducts your money.
Oh,
Deductions, yes. Remember, it goes back to the rule. Do you remember that for credits you have received in the bank,
yes.
for them debit, a payment. So a direct debit is a deduction. A deduction on the bank. This is a deduction on the bank, where money is directly deducted without your notification. A very good one are the bank charges. Bank charges, you may not have computed all these bank charges, so you end up having more money as compared to what is in the bank statement. So it could be bank charges, could be outstanding orders, where you made an order to be paying, maybe electricity every month. So this money is automatically deducted. Okay? And many others. Then the other one is what we call a dishonored check. Next is what we call dishonored checks. What are dishonored checks? A check that is dishonored. A check that is dishonored. It could be either you received that check and it has now been dishonored, or you're making a payment through that check and it's being dishonored. Are we together? So with a dishonored check, this is where the bank refuses to pay. See that? The bank refuses to pay or recognize a check as an instrument for transferring money from one person to another. So dishonored is where the bank does not recognize or does not pay off the amount stated. Yes, please. Someone had raised their hand up.
Excuse me, madam.
Yes, please.
What could be another word for dishonored?
Another word for
Dishonored.
dishonored would mean no, not respecting a given instruction. have bounced. You've heard of bounced checks? Checks that bounce?
Yes.
Yeah, this one would be in that form. Bounced checks, checks that have not been worked upon by the bank. Okay. Does that make sense? My friend who asked.
Yeah, it's okay.
Okay. So this honored or bounced checks that have bounced, it has not been paid or they have not respected the instruction. You know, when you write a check, you're instructing the bank to act in a certain way. You could write a check and say, pay so and so 2 million. Or you bring in the check asking for payment. So a dishonored check would be bounced, unpaid. Again, when I think hard about it, I could as well consider it as unpaid, bounced, rejected. Rejected, check that has been returned, bounced, returned. Okay, so we have reasons, if I can even explain further on the treatment. What are the reasons for dishonored checks? What are some of those reasons why checks are dishonored? Why they bounce, why they come back unpaid?
Maybe lack of insufficient funds in the bank, at the bank.
When you say lack and insufficient?
Sorry, insufficient funds.
Insufficient funds, yeah. You have 100 million on your account, you're saying pay so and so 150 million. The bank will not say, okay, let's give them what we have. They'll simply reject your check. We're together. We have many of them here. Lack of sufficient funds, amount in words differing from amount in figures, drawer signature differing from the specimen signatures, expired checks. Do you know expired checks? A check was written pay so and so by 25th of March. What's the date today? 30th. And there is nothing. 30th, and this check has never been presented. So it will be termed an expired check. Alterations on the check not countersigned. You know, every time you cross out, pay 50 million, you're like, sorry, 500, everything you cancel out, you must sign off. And so on. If there is no account title on the check, or where the drawer's confirmation is required by the contract and checks are not confirmed. Those are the reasons. Now we want to understand the treatment. What happens? First scenario is where you're receiving. You as the business, you're receiving a check. You understand these things very well. When you receive a check as a business, what are you going to do to your bank?
Going to credit.
When you receive a check, what are you going to do?
Shall credit the bank.
Yes, in the cash book, we shall debit bank. But then, in the bank, this check is dishonored. It's rejected. That means the transaction is only appearing in your cash book bank column. It's nowhere in the bank because the check was rejected. So you see what is causing the differences in the balances? Then the other scenario is where you're paying through a check. When you pay through a check, what do you do to the cash book?
Shall credit.
The bank.
Hmm?
You credit the bank.
We credit the bank. We credit the bank because it's a payment. But then later on, when you present this, the check unfortunately bounces. It's not posted. So for dishonored checks, they appear in the cash book, but nowhere in the bank, hence causing the differences in the balances. Friends, are we together?
Yes.
Perfect. So those are the dishonored checks. Then lastly, we have errors. Errors. You know, we are all human, right? So you could make an error. You received 100 million, received 100, or you received 10 million, but instead you record 100 million. This is happening in the cash book. The actual amount received is 10. For you, when you're recording, since you've received, you debit 100 million. Meanwhile, the other person is sober. For them, they credit 10 million. Are you seeing where that issue is going to come from? Okay. Wrong amount. The other one could be where you post on the wrong side. You receive 10 million in the cash book, you credit 100 million, the right amount, but wrong side. Then the bank comes here and says, hey, this person is receiving, they credit 100 million. What is happening? Credit 100 million, credit 100 million. There's no way the bank can credit and the cash book also credits. In the cash book, you also credit. So it could be wrong amounts or wrong sides. So under the wrong amounts, you could think about an undercast where you have posted less. Now, for instance, here you posted more, overcasts and undercasts. We are going to see how now do we correct such errors? How do we conduct a bank reconciliation? So I remember where we started from. Started off by telling you how we get through reconciling these balances. We talked about two people recording similar transactions. Then we moved to the rules, said we have the accountant recording and someone in the bank recording. We said we have rules in the bank. What are the rules of recording these transactions? That every time we receive in the bank, accounts are credited. And if there are payments, they are debited. In the cash book, when we receive, we debit. And if it's a payment, we credit. Then we looked at some of the causes of the disagreements in balances. One, we talked of unpresented checks, uncredited checks, direct credits, direct debits, then the dishonored checks, 5, 6. Those are the errors. Are we ready to correct these errors, members? Any question? So we have procedures. I request everyone writes down, may have some changes. Procedures. When carrying out a procedures followed when carrying out a bank reconciliation. So please note, members, that you're presented with the cash book. Focus is on the bank column and the bank statement. You're given the cash book and the bank statement. So step 1, for instance here, I want you to look at this question. Oh no. Okay. So assuming you have this Janitech Business Service Company Limited cash book, but the bank column. You see that? Debit, credit. You can see these are the items on the debit side and the items on the credit side. Then in our bank statement, we have debit amounts. Whenever they are making payments, all those figures are on the debit side. And any receipt of money, that's a credit entries. Then you have the balances. So this is what we are saying. You're given the cash book and the bank. So you're able to start off with the balances brought down. We are going to be comparing. We have balance brought down. What they started with should be similar to what they also started with. In the bank statement, it's clear. They started with this amount, and the accountant had also captured that in the cash book under the bank column. So after obtaining your cash book and the bank statement, step number 1 is tick off transactions that appear both in the cash book and the bank statement. Tick off transactions that appear both in the cash book and the bank statement. Are we together? However, if you stop at that, this is what I mean. That you're going to go transaction per transaction and tick, meaning the accountant recorded it and the banker recorded it. But before you completely tick, please add this statement. And write and say that ensure that those transactions are appearing both in the cash book and the bank statement ensure that those transactions appearing both in the cash book and bank statements appearing both in the cash book and bank statements are of the right amount, right or similar amount, and posted on the right side. Okay, and posted on the right side. That if this is your cash book, you have a transaction of maybe this check number T able 004 450. The bank credited 50 shillings. Sorry, in the cash book, the accountant recorded 50 shillings. When you move to the bank, you look out for that check number 004450 over here, 50. Before we tick, we need to check, is it the right amount? It could be the same check number, but here in the bank you have 50, whereas, in the bank statement you have 50, whereas in your cash book you have 500. So before we tick, we need to find out, is it the right amount or similar amount? That the same check number has the same amount, both in the cash book and the bank statement. Then two, after confirming that, are they on the right side? Because we have cases where someone posts on the wrong side. If in the bank, it's on the credit. In the cash book, it should be on the debit. Just a minute, please. Sorry. Okay, let's proceed. I've gone off. I know some people now they are saying, can't hear, I can't hear. Where is she? I'm here. So I was saying, before you tick, because you're excited, first of all, you need to confirm two things. The right amount and on the right side. And I was saying, if, for instance, if I'm to analyze this transaction over here, it's clear that it was a payment. It was a payment. So if we have a payment in the cash book, I'll be using this abbreviation. In the cash book, we expect that we credit the cash book. Okay. Then in the bank, for a payment, we expect that we debit cash book because we are paying. So we debit the cash book. So you need to confirm these. In the cash book, is it on the credit side? Yes. And in the bank statement, is it on the debit side? Yes. Then we tick. Otherwise, if you just tick it off without checking whether it's on the right side or the right amount, then you're not reconciling. Already you're confirming figures that already have errors in them. So members, ticking a transaction means that transaction was posted correctly with the right amount and the right size. It has no issue. You go ahead and tick both in the cash book and the bank statement. So for this example, you would simply look at this transaction, 50 on the credit, 50 on the debit. Okay, so you simply tick again the amount, both in the cash book and the bank statement. So you go through for all. You go through for all. So after you have ticked everything, then you now look out for any other. So we might have the unticked items. Or maybe before we go to that, because I want to modify these steps a little bit to ensure that you understand it well. So after you have ticked, let's talk about those that do not qualify. So transactions posted on the wrong side or with wrong stroke differing amount indicate E to mean error. Indicate E to mean error. We're together. Indicate E to mean that there is an error. Are we together? That is step 2. Then next, step 3. So this is what we are trying to say. Assuming that that transaction does not qualify. Assuming that transaction does not qualify. For example, Can we identify any here? Mm-hmm. Yeah. Look, guys, look at this check number 130. That is our cash book, bank column. Check number 130 is 2,200. Then in the bank, check number 130 is 4,200. Should we tick this transaction? So when you come across such transactions in the cash book, it's on the credit side. You see that 2,200. Then in the bank, it's on the debit side, which is okay, but it is 4,200. So a step we just wrote down, we're saying that when you come across such transactions, you simply put error. Are we together? You simply get to this, put error. You do the same here. Where? Here. Error. Okay? So step 3. Now, after you've done that for all the transactions, you will have some other transactions that do not appear in either in the cash book or they don't appear in the bank statement. So those are what we call the unticked items. Those are what we call the unticked. Over here, what we're talking about, those are the unticked items. So you could have unticked items in the cash book or the unticked in the bank statement. So we use we can start with the unticked items in the bank. In the bank statement, they are used to prepare an adjusted cash book. Do you get what we have written down? We are saying that after you have ticked off the right amounts, you have indicated on the transactions that have errors, there will be some transactions that will be left out, both in the cash book and the bank statement. So the ones in the bank statement, simply it means that they do not appear in the cash book. They were not recorded there. They were not recorded. So for instance, you're having transactions on the credit side which do not appear anywhere on the debit side. So what do we do? What happens is you get those transactions and use them to prepare the adjusted cash book. Are we together? You use them to prepare the adjusted cash book. So the unticked items in the bank statements are posted in the adjusted cash book. Like someone telling you, you had some transactions in the bank on the credit, maybe you paid salaries over 100 million. It's unticked, meaning it did not appear in the cash book. So come, draw up your cash book and post it there. Salaries are payment, so that means they should be here. Post the items there. Is that clear? Guys, are you following?
Yes.
Oh, very good. So now that you've done that, next is we need to look out. How about the unticked in the cash book? We have seen that unticked in the bank statement, but how about the unticked in the cash book? So step 4. The unticked items in the cash book. The unticked items in the cash book are used to prepare a reconciliation statement. And these are known as the timing differences. They are known as the timing differences. So the unticked in the cash book, we are trying to say that they do not appear anywhere in the bank in the bank statement. Therefore, include them in the reconciliation. Include them in the reconciliation. So with that, you will be able to reconcile the balances. This is the format. We have said
madam.
we have to prepare two things, yes?
You said the unticked items in the cash book are used to prepare a reconciliation statement. Is it also an adjusted reconciliation statement, or? Yeah, that's what I wanted to know. Do we prepare now another reconciliation statement to put these?
Yes. Yes, we are
okay,
supposed to prepare the reconciliation statement, and these are the formats now that I'm heading to. Okay. So first of all, we said you need to open up the adjusted. We are going to adjust that cash book. This is what we call adjust, because it has some errors, it has some items that are missing, that are appearing in the bank statement, but they are not in the cash book, so we have to include them. So in the adjusted cash book, you start by bringing down the balance you're going to adjust. Like someone telling you, this is the cash book, this is the balance I was reporting, which is over here. This is the balance we are going to adjust. First of all, let's see the difference if we are to analyze this question. This is the cash book, and they are reporting that their balance should be 641. But in the bank statement, the balance is normally the last one here because these are cumulative figures. In the bank, they are saying the balance should be 903, but in the cash book, they state that it should be 641. So we start by adjusting this balance. We cannot go back to go through one by one, but rather start by picking up. Remember, you finished ticking off those that are okay. So now we are going to just adjust the closing balance. Many people confuse it with this, the opening balance. People confuse it with that opening balance. Remember, with this, you have not yet included all the transactions. Do you want to prepare the cash book afresh? You'd rather pick the closing balance after considering all these transactions and make the adjustments. So you start by bringing down that balance brought down that you're going to adjust. Then we have the unticked items in the bank statement. Bring them here. Most of those unticked are what we call the direct credit and the direct debits that we looked at, where transactions are directly posted either on the credit side or the debit side. You get me? So we may start off with the direct credits. Where do you think we should post the direct credits? Because this will appear unticked in the bank. It's a direct credit. Money was deposited, but the accountant did not recognize this transaction. So where do we post the direct credit? All such transactions. A direct credit, where do we post that? In the adjusted cash book.
I think on the debit side, because the bank had received some money.
Perfect. So the direct credits will all appear there. A credit in a bank means the bank received money. So to reflect the same in the cash book, it should be on the debit. Then the opposite is true for direct debits. Direct debits, it means the bank was paying. That transaction is nowhere. Come and put it here in the cash book. Okay. So that is how you have prepared the adjusted cash book. In case of any errors will also be corrected. I'll talk about that. So after you have prepared that, then you prepare the reconciliation statement. Requires that you start with the balance as per adjusted cash book. So you all note that the unticked in the bank statement are used to prepare the adjusted cash book. These are the direct debits and direct credits. This will guide you so much. Direct debits and they are the direct credits. They remain outstanding transactions, not posted anywhere. Then the other unticked in the cash book are used to prepare a reconciliation statement. Those are the unpresented. They are appearing in the cash book as unpresented checks and uncredited. They are in the cash book, but nowhere in the bank. So we need to come over here and make adjustments. So the format requires you add back unpresented, the checks that were not presented. We are going to add them back. You list them and then less uncredited checks. On which side are the unpresented checks in the cash book? These ones are the unticked. Unticked on the credit side of the cash book. Uncredited, the bank did not credit it. The bank did not credit, so they are unticked. On the debit side of the cash book. The unticked on the debit side of the cash book. Is that clear?
Yes.
So how do we handle errors? How do we handle errors? Step 4. Correct all errors and balance of the cash book to get balance of the cash book to get a revised adjusted cash book balance. So it's that balance. After this, we are saying you've corrected all the errors. You balance off and determine balance of and determine the new closing or adjusted balance. And that is what you bring here. Balance as per adjusted cash book. So it's onto this balance that you add back the unpresented checks and you less the uncredited checks. Then you will reconcile this amount back to the bank balance. We are making adjustments to ensure that we revise back to the bank balance figure. We shall see that when we try out a number. I think that is all. Now about the errors, please note the errors could be that you have posted more, could be an overcast, it could be an undercast, or it could be the wrong side. Shall discuss how to correct such errors. Okay, just 5 minutes of resting, then we can try out a simple
Excuse me, madam.
example. Yes, please.
To the one of overcast in a, let me see, in an income statement, how do we put it as an expense or what? Because I saw a question that's like it was having overcast, something like that.
Yeah, we are going to see how to correct all those errors. With an overcast, if an error was committed in the bank, it's corrected in the bank statement. And if the error is made in the cash book, that would be corrected in the cash book. So it's all about cancelling out what had earlier been recorded. Okay, so we're going to see how to go about all such errors. So, just a minute, then we go through this, like 5 minutes. I think members can be tweaking. Should we do this? Don't know, it seems so easy. Seems so easy. There's no error. Hello. I think let's do this shorter one in the remaining minutes. Let's do this shorter one and we see. Yeah, but this person writing on the board. Enrolling students is not easy. Because why would someone write on the board over player? So I start saying, please don't write on the board, please. I will leave you do what you want. Okay. So we have this question. We only have 10 minutes. Should we save it for another day? But at least let's go through. So that's the next lecture. We start on something. On another question, sorry. At least let us go through. It's not hard. The following is a cash book and a bank statement of Johnny Tech Business Service Company Limited for the month of July 2015. So this is the cash book. Okay. We have items on the debit and the credit. Then we have the bank statement with items on the debit and the credit. So the first step is we tick, right? Let us tick. We can start with the debit side. Items on the debit, we expect if they are debited in the cash book, they should be on the credit side in the bank. We start off with a brought down. Okay, the bank has the right brought down figure. We have this cash limited 220. Do we have it here? No. Where is it? It's here, 220. We tick. Both in the cash book and the bank. We have 330 on the debit, Morris and Son. In the bank statement, okay, they just generalized as checks, 330. Credit side, right amount, right side. We tick. 330, 330 on the debit in the cash book, credit side in the bank. Pot gross, 63. Do we have it? 63? No, we don't. We leave it. We move to the credit side. We are ticking. Checks 004450 on the credit in the cash book, and in the bank, they are on the debit. Right side, right amount. Right side, right amount. Check 004451. It's nowhere. Then check 004452. It's nowhere. 52.
We have it.
Is there 10?
We have
10.
it.
52. We have it. 52. 10. Right amount, right side. 89. That's Liverpool. Yeah, right amount. But this 004453, nowhere. Then the 004454, nowhere. 004455,
We have it. It is here, 250.
Here. 250 right side on the debit, on the credit here. Bond insurance 122. We have that. We have finished. For this question, we didn't have any errors. Let us read the additional information. Prepare the adjusted cash book and the bank reconciliation. So we have no errors. Okay, so we simply draw up our adjusted cash book. We said we are adjusting which balance? 641. So that's the balance we bring here. And then in here we said we shall post the direct credits. Being that we are posting on the debit side, we bring here direct debits. We bring here direct debits. Okay. So under direct credits, check. Where did we say we find transactions reported in the adjusted cash book? We look out for the unticked in the bank statement, which means they were not entered in the cash book. So we move to the bank statement, identify the unticked. Identify the unticked. On the credit side, are you seeing any unticked? Credit, please take note, we are not looking at balances. We are looking at the debit side and the credit side. Do we have on the debit? We can start with the debit. Any unticked? You know, when I move this, these things move.
We have.
So you better tell me. Which figures do we have on the debit side? The unticked on the debit side, those are the direct debits. In the bank statement. Do we have?
We don't have. No.
Then
We don't have.
credit. Do we have direct credits? We also don't have any direct credits, right? Okay. We don't have any errors. This was very simple. We don't even have any errors. So that's the balance that we have. This doesn't bring it out well. Needed some serious transactions. Okay, then I can move to the bank reconciliation statement. Balance as per adjusted cash book. What do you add back? Unpresented checks which had been deducted, we add it back. Then we less uncredited. So do we have unpresented checks? Unticked on the credit side. 004451. That is 1/3. 004453. 27. 004454. 49. You see that? So these had been credited in the cash book, and yet this money was not paid. So we add it back. Are we together? Then we less, get the total. Then we less uncredited. The ones that had been debited in the cash book, but the bank did not credit, they are uncredited. Unticked, we only had Port Bros 63. So which totals do you have? So what do you have?
Madam, are we supposed to also include this 641.7 here and we add it with these unpresented checks? Then subtract.
Yeah. If we don't have any adjustment for that, then we're supposed to do that. Our time is up, but this was not a very good example to use. We have no, I don't know how come we have no direct debits, we have no direct credits. So we shall do another example, okay? Shall do like 2 more for us to understand the steps very well. Yes, Musa.
Good afternoon.
We need to look at this, at least get time and speak at this one. Yes, please.
Madam, in the bank statement, you have the bank charges. When the bank charges apply to the direct debits.
Was it unticked? Oh, yeah. I was asking for the unticked. Yes.
So where the bank charges, then we have the deposit that was made on 31st for Ricardo Limited.
Oh,
being
this
a direct
was also not ticked. As long as something is not ticked, they are nowhere. Thank you. I was wondering, these two are nowhere.
Yeah.
When you
Yes,
get
madam.
here, the bank charge that is on a debit, that is a direct debit. Money was deducted in line with bank charges. So you move here and include bank charge. My pen is disturbing. Bank charges over there. Then we have a direct credit. Direct credit should appear here. So put that there and then balance off this adjusted cash book. We must balance off the adjusted cash book. Are we together? So after balancing off, the revised figure is brought here. Then we add unpresented and less uncredited. We shall start from here in our next section. And then we shall also look at this other number, and that will be it for bank reconciliation. Okay. Unless you have any questions, class has ended.
Madam,
Yes,
Madam, I
please.
wanted to ask you, the unticked items like on a bank statement, like if there are unticked items on the bank statement on the debit side, those are direct debits.
On the debit, no. In the bank, remember that rule. In the bank, if it's on the debit, it should be on the credit. So
Yes.
bank, those will be direct debits. They come to the credit side.
Yeah. I wanted to, Auntie, you were telling us that unticked items on the bank the unticked items after you've ticked the ones that are both on debit and credit of the bank statement and cash book, the unticked items, there's one which is a direct debit and a direct credit.
We said the unticked, let me see, where's my previous? I don't know where I was writing that one. This is group B. How come I don't see that?
No, I need to.
How come I don't see that? Yeah, but I had written it down for you somewhere. And I said those two, yeah, over here. The unticked can either be direct credits or direct debits. But the unticked we're talking about are the ones in the bank. The ones in the bank. So the unticked in the bank, it means the cash book did not capture those transactions. So the ones on the debit, those are direct debit. The ones on the credit, unticked, meaning they do not appear. That's why you did not tick them. They are just there. So the ones on the credit are the direct credits. Then when you move to the cash book, get it very well. This is the bank, unticked in the bank. Now the unticked in the cash book, for those ones, the ones we have what we call the unpresented checks and the uncredited checks. Is it clear?
Yes. Now, May, I wanted to know how would you distinguish this one was a direct debit and a direct credit on the bank statements?
It will be clear, my friend. Now, for example,
Okay.
here, I will see the unticked, this that we did not tick. And which side is it? It's on the debit side. So I say this is a direct debit. Then this one we didn't tick. Which side is it? It's on the credit side. It's just that I wasn't seeing these two values. I think my board was stopping at transaction 30. I hadn't seen these two values. So these two values are nowhere. Let's look for them to confirm. They are not ticked. They are nowhere. When you look here, bank charges would be on the credit side, but we don't have any bank charges. Then you also look for the direct credit, 179. 179, again, direct debit credit would be a debit entry. It's nowhere. So it's unticked. That's how you know.
Okay. Thank you, madam.
2 numbers and you'll be good to go. 2 more numbers, then you'll be good to go. Okay. Have a lovely afternoon.
Okay.